to our daily recap. This day, we have a meeting with our loyal member client. Basically, their husband and wife, they've been in the business in a muffler shop. Basically, they're repairing and fixing cars, changing the mufflers. They have their location where they also bought the property. So basically, it's a commercial building. It's a Suite ABC. Suite ABC. They bought that building, and then they also occupy one of the suites, which is the Suite A. Now, the question that we have and that we went over with them is they are renting out Suite B and C to other tenants, but they also renting Suite A. So they build two LLCs, the rental LLC, and then their business itself, which is the muffler shop. The question is that we went over today is how would they separate the business and rental income? Because their previous tax professional and bookkeeper, they put all the income together in one Schedule C, in one business income, but that's not the right way of reporting a rental income and business income. The business income should stay on a separate bank account. For example, it's an ABC LLC company or Muffler Shop LLC. All the income should be there because at the end of the year, they are being taxed as up to 37%, whatever the net or taxable income. Now, the rental income for them, if Suite B and C, those are other properties, they need to go to the rental LLC bank account. Because either if it's a direct deposit, auto payment, or the tenants are giving them checks, it should go there. However, just to keep in mind, remember they still occupy Suite A, so they also have to pay the rent on the rental LLC. Basically, they are the tenant of their own property. And at the end of the year, even though it's one LLC, like one rental LLC, they have to have three different income and expenses worksheet. That is the form Schedule E. Because as a tax preparer, we have to separate how much income they make in Suite A, Suite B, and Suite C, and what are the different expenses they incur from all of those rental properties, on top of the income and expenses they had for their business income or the Muffler Shop LLC. Right? So there you go. That's a little advanced or complex in terms of the proper record keeping. Remember, a good tax planning starts with a good record keeping. Also, after that meeting that we have with our client, with the IRS news on since May was a business week, the IRS encourages to deposit payroll taxes electronically. When you have employees, you are responsible to contribute their payroll taxes consists of the Social Security and Medicare taxes contribution. So you pay half of those Social Security and Medicare. The same thing with your employee, they also contribute the half of those Social Security and Medicare. However, your responsibility as a business owner is to contribute here in the state of Texas, to contribute 100% of unemployment tax rate. Then, but the federal income tax on it's a sole responsibility or deduction from your employee. That's not your contribution. At the end of the year, you gave them W-2, and what we do is we prepare their taxes based on the income on their W-2. So if you haven't set that up, and we do that service, the payroll, we do payroll by weekly, or even monthly, and we're the one issuing W-2s for your employees. Then that's the news. Then in the afternoon, we did have a meeting with a clinic. He's a nurse, and then he built his own C-Corp, a home health company that visiting nurses to the house of the patient. The problem is he asked whether it's ideal for him with the C-Corp formation. I don't recommend that in the tax standpoint because C corporation is subject to double taxation, which means to say he's going to end up paying at least 21% on the taxable income of the C corporation. At the same time, he has to pay whatever income he has on the C corp. He has to report it on the personal return, which is also subject to taxation up to 37. I mean, it starts at 37% and up. I'm just giving you the rough estimate But Chris, what would be the ideal? I would suggest that he can start as a professional limited liability company or a PLLC because he has a license. He needs a license, so it's a PLLC. Then any moment of the year, he could be an S corporation if he wants to put himself on payroll. It gives them a business owner. It gives you an asset protection benefit, but at the same time, it gives you tax flexibility. However, it does not subject you to double taxation and less paperwork. Why? Because an S corp company, they are not separate. They're not. This is a pass-through entity, which means their S corp is not subject to double taxation. All you have to worry is whatever your S corp income, you have to report it to your personal income at the end of the calendar year during tax season. And on the other hand, speaking of tax returns, the deadline, always make sure if you file an extension for your S Corp and partnership return, the deadline will be September 15. Unless otherwise it falls on weekend, you have until Monday, the next working days, to file your tax return. And for your personal return and C Corporation, the deadline of filing is October 15. If it falls on the holidays or weekends, then you have until Monday to file your return. So therefore, what are you waiting for? If you have a tax and bookkeeping concerns, for us to help you with dealing with the IRS letters, also with your loan application, organized and accurate record keeping is very important in able to facilitate the faster access to the grants and loans. Announcement, guys, if you are in Dallas area, we will have our business mixers this coming August 23 at 6:30 p.m. All you have to do is register to the link below, RSVP today. There you go. What are your takeaways? I hope you learned something. I'm trying to whisper. But if you learned something, please let me know. Comment below. Please click share and subscribe today. I'm Chris Waikoko, IRS acceptance agent and founder of a virtual tax bookkeeping company in the US, Waiko Tax. See you soon. Stay safe. Bye.